Hi and welcome. My name is Andrew Braun and I head up the marketing team at NetWealth. As part of my role, I investigate consumer and technology trends and examine their impact on our lives and our industry. Like many of you, I've grown up with technology. I remember doing basic coding in DOS and playing games such as Decathlon on my first computer, an Apple IIe. I remember a time before Google when we were searching with Ask Jeeves and Alta Vista. I still have my Hotmail account, the first of the big email providers. I was dismayed when AOL merged with Time Warner for over $150 billion and witnessed the music band Metallica sue and successfully close Napster, the free pirate music site. I failed to invest like so many in Facebook when it listed because they didn't have a clear mobile phone strategy. I've seen the rise of Apple, Google and Amazon, and Microsoft's second coming as a business operating system. Over the last 20 years, I've been a keen observer of the transformation of our lives by technology. And today, I'm going to reflect on the year so far, but with this technology lens, and examine what this may mean for financial advice firms. Over the last 6 months, we've all witnessed and participated in a global tragedy, a crisis of immense proportion. Lockdown, quarantine, and wave after wave of changing information has profoundly and perhaps permanently altered the perceptions and behaviours of humans around the globe. And as restrictions ease in Australia, schools and businesses reopen, and some optimism returns, it's a moment for businesses to take stock of changes in consumer sentiment, beliefs, and behaviours and evolve their business for not just a return to normal, but for identifying how they can emerge stronger and, more importantly, more connected and engaged with their clients. Amongst all the behavioural changes, it's clear that in a matter of about 8 to 12 weeks, we've fast forward and vaulted 5 years forward in consumer and business digital adoption. So much has changed. Just have a think about the new digital experiences that you've had, your business has had, and most importantly, that your clients have had since COVID-19 started in early March. For some, they've started exercising at home over Zoom with strangers and an instructor they've never personally met. Others have shopped online for the first time, whilst for many, they're starting to feel comfortable receiving packages and food deliveries almost every other day at their door. Both Afterpay and Kogan's share price illustrate this momentum shift to online commerce. And the way we pay for things has shifted as well, from cash to digital, which is not surprising. With research from MyState Bank showing that 2 in 3 Australians have been using less cash since the outbreak. They're using contactless payments in store, online subscription services, and micropayments for food and virtual coins from our favourite apps. People are now consuming entertainment services more. They're forking out for at least one, but often more than one streaming subscription service. Whether that be Netflix and Disney Plus for movies and TV, KO for sport, listening to audiobooks or reading the New York Times or Financial Review. Disney Plus nearly doubled its subscriber base during the period to about 15 million people globally, a feat that took Netflix 7 years to achieve. And people are entertaining themselves in new ways too. They're visiting online digital worlds like Minecraft and Roblox, cooking with master chefs, learning the guitar, making TikTok movies and listening to thought leaders on any topic imaginable via podcasts. We are visiting galleries and attending events virtually. The popular video game Fortnite recently hosted a concert that was virtually attended by 12.3 million users. And we're seeing record numbers of first-time traders using their spare time to launch day trading careers. According to the AFR, in the US, the free brokerage stock trading app Robinhood, which is valued at about $8 billion, added a staggering 3 million users in 2020, while average daily trading volumes tripled. And in Australia, the average weekly value traded through CommSec grew almost fourfold, from 1.7 billion before the pandemic to 4.2 billion during the COVID-19 period. We've mastered multi-mode communications with our friends, with Zoom, Skype, WhatsApp, Google Hangouts, and Houseparty, often all at once. Houseparty, a video conferencing app with games and quizzes, had 130,000 downloads in early Feb, which skyrocketed to 17.2 million downloads in a single week in March. And Zoom daily user base grew from 10 million to 200 million in the 3 months during the crisis period, while its share price soared. Telemedicine, which was put in the too hard basket by many health professionals, has exploded as a necessity, and as such we are more and more comfortable getting advice from specialists via a digital interface or from an app. Interestingly, according to research firm CBI Insights, funding for mental health startups increased by more than 400% in the first quarter in 2020 compared to the prior quarter. And virtual reality is starting to see its potential as a tool to remotely train large numbers of medical staff on how to treat coronavirus patients. And, of course, many businesses shifted to remote working overnight, which brought on the heavy adoption of cloud-based software, a reliance on video meetings, and the onset of remote employee education through hours and hours of webinars. Research suggests that it only takes on average 66 days to form a habit. And this is even more so likely when the environment has changed as well. For many, as a result of the pandemic, it has been longer than that. Much longer than 66 days, unfortunately. And behaviours have definitely changed and habits have definitely formed. And many of these behaviours are digital in nature. And neither the young nor the old have been left out. In fact, according to research conducted in May by Core Data, most people aged 50 plus are already well versed in digital. And those that aren't have had to become so due to the pandemic. For example, almost 1 in 4 seniors are using social media and video conferencing services more since the crisis started. Ultimately, for many, their relationship with digital has changed forever. The crisis has made us all early adopters of technology. This ultimately begs the question, what does it mean for the wealth industry as a whole, and for financial advice firms specifically? Well, good financial advice is built on a relationship of trust and personalised advice. And with the pendulum shift to digital, it's important that both the relationship and the advice should shift with it. But as an industry, we still have some way to go. From NetWealth's own research in the 2020 AdviceTech report, we found that only 8.9%, or 1 in 10, of advice practices believe that technology is pervasive in all client engagement interactions. This is a problem. There is a clear disconnect between what clients are asking from you and what we are offering, which the pandemic has made even clearer. To deliver on the promise of a truly digital client experience, advice firms need to think about doing 2 things. Firstly, they need to think about adopting a Silicon Valley mindset to technology investment. And secondly, they need to reimagine their advice tech stack to focus on the client experience and not just operational processes. When considering the client-facing digital experience, there are many touch points that can be enhanced with technology. From the first impressions your website makes with potential clients, to how data is collected during the fact-find process, to how advice is delivered, and how you periodically review your advice and give that to your clients. Without a full examination of your business strategy, it's impossible for me to suggest which are the most appropriate technologies there are for you. However, the 2020 Net Wealth AdviceTech report may provide some guidance. In this report, we identified 3 approaches which could improve your digital client experience today. Firstly, you could offer a client portal that empowers the customer, your clients, with self-service tools. Secondly, you could look to develop a multi-mode interface-to-interface communication solution which goes beyond a phone call and email and extends into new, more modern communication technologies. Thirdly, to improve trust and add value to the relationship, you could create personalized content and distribute it via your digital channels, social media and website. This is often referred to as content marketing. So what I want to do in the next part of this presentation is just consider these 3 in a little bit more detail. As part of NetWealth's research, we identified a select group of advice firms that had a higher business performance as measured in FUA, revenue and profitability, and were greater adopters of technology. We call these businesses AdviceTech stars. We believe AdviceTech stars should be a minimum benchmark for advice firms, specifically those that are looking to take advantage of the shifting consumer behaviour due to the crisis. Almost 8 in 10 AdviceTech stars have or plan to have a client portal in the next 24 months. And the reasons are clear. 85% of AdviceTech stars expect a client portal will deliver improved communications with clients, better client collaboration, improved client engagement, improved transparency, and ultimately, improved client satisfaction. Now, a client portal can mean a lot of different things to a lot of different people. So, based on our research, the must-have features of a client portal as expected by AdviceTech stars include the ability for the client portal to support clients to easily manage their relevant details, including a live fact find, and securely manage wealth documents. They want a client portal to have planning and monitoring tools to aggregate all their financial accounts, property, and other assets, and track progress to goals. They want a client portal to execute investments with things like digital signatures and digital consent. But what's interesting is advice firms don't want their clients to invest through the portal. They see that the realm of the advice practice itself. They want a client portal to deliver education and insights, including economic or finance news. And they want the client portal to support two-way communication through chat and tasks, which is arguably a more secure way to communicate than via email. And AdviceTech stars tell us they want a client portal to be via a mobile app experience. By now, many Australians probably have a Zoom app, a WhatsApp app, a Microsoft Teams app, a Skype app, and use FaceTime or Google Hangouts. I know that when I speak to someone using my mobile phone's normal call function, it almost feels old school. Advice firms need to recognise that today their clients use multiple communication apps and they use them frequently. And what's more, they flip seamlessly from one to another and back to the other as part of their daily lives. They use Facebook Messenger to chat, they use instant messaging and phone calls, and they communicate on all of these devices all at once. So it's little surprise that although the phone and email remain the top forms of client communication tools and now video conferencing, other forms of communications are gaining in importance. According to our research, advice firms who have Generation X and younger clients are more than twice as likely to use mobile and online messaging advice tech, such as WhatsApp, to communicate with their clients. Imagine this. Imagine onboarding your younger client base with a WhatsApp group. In this group, you could have both spouses as well as the advice team members from your office. You could share important updates quickly, the status of implementation items, and request them to action them if required. Your WhatsApp group becomes your onboarding hub, a much simpler and easier way to communicate in a more timely manner. The third area to help improve your customer experience is through content marketing. Almost 3 in 4 AdviceTech stars add or modify content on their website or blog at least monthly. These companies, these AdviceTech stars, update their website and blog with stories and articles and interviews, positioning themselves as leaders, as organisations that have more knowledge than their competitors. This content on their website and blog and social media says a lot about who they are as a business, what they stand for and how they go about things. The content is a way to engage and build trust with their clients and future clients, their prospects. Imagine if a prospect found your website from a Google search and was presented with an interesting article on the economy, or on retirement, or on diversification, on SMSFs, or on cash flow management. Surely that would build trust and foster a positive client experience. AdviceTech stars are leaders in this area. They are more likely to have their website or blog updated at least monthly with content. They are more likely to send emails of an informational, educational basis on a monthly frequency, and are more likely to post on social media at least weekly than the rest of the industry. It's important that your marketing strategy isn't, we need a Facebook page, or we need to regularly post to Instagram. Rather, your marketing strategy should be led with a content marketing plan, a plan to create interesting and unique content for your audience. McDonald's is a traditional bricks and mortar business. Whether you like their burgers or not, it's the world's largest restaurant, selling an amazing 75 hamburgers per second, according to one of its training manuals. It's achieved this through its ability to deliver a consistent, reliable, and affordable product at scale. Early on, they optimized their processes. They did this by inventing such things as a new kind of spatula, a new dispenser that squirted the same amount of ketchup and mustard every time, and a rotating platform to speed up the process of assembling burger, bun, and condiments. McDonald's shows us, as an industry, as a business, that back office processes are critical to delivering a great client experience. For them, excellence in customer experience has largely been an exercise in scaling process optimization, their back office. Now, as advice firms grapple to lower costs and become more efficient, whilst also enhancing the customer experience, a technology that could be relevant for you is managed accounts. Managed accounts as a technology not only delivers on the promise of improved efficiency, but for many at a level of consistency and reliability to the investment advice experience. With managed accounts, your clients know what to expect and they're clear about your investment proposition. What's more, they're also treated equally without regard to the size of their investment. And this was really best highlighted recently during the crisis, where there was evidence that advice firms with managed accounts were better placed to respond to the sudden market changes that we saw at the beginning of the crisis in March. From Netwealth's own data during this period, what we saw was that 50% of managed account investment managers bought and sold assets in their models, their managed account models, many times. Some of them doing it up to 12 times during the March period. On March 19th, when the All Ordinaries dropped under 5,000, we made over 42,600 managed account trades, which was up from about 2,000 trades a month earlier. 70% were buyers, as managers were looking to take advantage of the opportunities. And What's really exciting is this happened for 33% of all clients in one of NetWealth's managed account models, most of which would have never received an ROA to approve the execution. Those advisors with managed accounts were much better placed to quickly adjust client portfolios and take advantage of a buying opportunity or even de-risk them. So the net result, and most importantly to the client experience, was that all clients in the relevant managed accounts benefited rather than a select few. Now, of course, managed accounts are not a solution for all advice and investment situations, so it's important that you consider the client's needs before recommending them. Now, turning our attention to how you can be more customer-centric on a different level. What we've seen is that to be customer-centric, a business must truly understand and have a complete picture of their clients. For financial advice firms, a great starting point is having a complete picture of their clients' wealth. This could be their platform assets, commercial property, other types of property, investment accounts, other off-platform assets, such as private equity or alternatives or art collections. For business owners, this might mean the business balance sheet. The great thing today with AdviceTech is you can amalgamate and normalize client data from your planning software, your platform software, your accounting software, your commission software, and then add it to bank feeds and off-platform reporting technology to get a total picture of a person's household wealth. By having this complete and unfettered helicopter view, you're much better placed to deliver better advice, and ultimately you're in a much better place to deliver a more tailored and personalised service. And who doesn't want to deliver that? And who doesn't want to provide that improved customer experience to your clients? Now, AdviceTech stars understand this, with almost 2/3 of them using dashboards and reporting tools to understand their clients and business better. And probably just as telling is that the majority use these AdviceTech tools daily. AdviceTech stars also understand the importance of integrating disparate systems and data sets, with almost 1 in 4 using integration technologies like Xeppo, Zapier, or have built some types of integration technologies in-house to link their different software systems and databases. Now, clearly digital is not the panacea for everyone. People will still want and some crave physical experiences with one another, including their trusted advisors. And not only that, once the crisis has ended, there will most likely be some backlash against remote and digital experiences. I have no doubt about it. Zoom fatigue is a real thing. So it's really critical for your business to assess the digital maturity of your clients and segment them. Segment your clients between traditionalists on the one hand, who have experienced digital recently but are more likely to return and want a more traditional relationship, versus those clients who are more digitally confident or have gained in confidence and will embrace your AdviceTech efforts in earnest. However, what is strikingly clear is that the digital confidence for many of your clients will have been reshaped by the crisis forever. Your challenge is how you augment digital with the physical, how you combine the best of both worlds. What you're looking to do is augment and combine them to create a new customer experience for your clients. I know that many argue, and many advisors might say that technology is just too hard. They just don't have the time or don't even know where to start. And in fact, the research we conducted in our AdviceTech report suggests that over 50% of advice firms told us a barrier to selecting and implementing technology was not having the time to understand and explore their options. With the acceleration of digital customer adoption, this just shouldn't be an excuse. It can't be. Today, business leaders must adopt a Silicon Valley mindset as a necessity, as disruption's just around the corner. To shift to this Silicon Valley mindset, you will need to realise that the barriers to technology adoption are less about technical limits, but more about your willingness to be part of it. You're going to need to feel comfortable working with vendors or suppliers on leading edge technology in a bid to fundamentally reshape your business. Or at least, you're going to need to invest in stable but not yet common technology to develop a competitive edge. AdviceTech stars recognise this and have this mindset. And as a result, on average, they generate more revenue, more profit, and have greater scale than the rest of the industry. AdviceTech stars are self-learners. 75% learn about AdviceTech from online reading or research, and over half learn from discussions with technology suppliers like NetWealth. AdviceTech stars are also meticulous and carefully plan and invest in technology. They're twice as likely than the rest of the industry to have a 12-month technology roadmap. They are more likely to have an annual budget dedicated to AdviceTech, which on average is about 6% of their revenue. They are more likely to invest in client engagement technology in the next 12 months. And probably most critical is that they're more likely to employ a dedicated in-house IT manager to make sure their planning and investment in technology is effectively implemented. As a result of the crisis, we've seen companies shift their entire workforce in days, and we've witnessed the exponential use of digital amongst Australians. As the great Winston Churchill said, "Never let a good crisis go to waste." With this change comes your chance to innovate, to digitise your business. It's your chance to boldly change and advance your digital customer agenda. In this unique moment, you have an opportunity to play it safe or continue the momentum from the last few months. Thank you so much for your time today. I hope you've had some value in hearing the lessons of technology and specifically over the last 6 months. If you're looking for further resources to help you on your AdviceTech journey, NetWealth has them available on our website, or you can do a Google search for NetWealth AdviceTech. You can also reach out to me on LinkedIn. Goodbye.